Tiger Brands, of course, which is one of the largest manufacturers and marketers of consumer products in South Africa. It's got all sorts of divisions. About half the business is grains, rice, maize meal, all that stuff, flour, bread. But what we're going to talk about is their enterprise meat products division, which, believe it or not, is the manufacturer of said product. So this is Woolies bacon, but this is manufactured by Enterprise, presumably in one of their mega complexes down in Escort in KwaZulu-Natal. Tiger Brands, though, is, excuse me, 72.2 billion rand market cap company. It's been going up recently. Price earnings ratio 17.22, dividend yield of 2.87%. Share chart, please. That's always a useful 5-year picture. Okay, it's come off a bit, but it's holding in the high 300 rands a share category.
Yeah, it's kind of moved into that new range. I mean, it's weathered a really tough spell with this drought that we've seen really well. The drought did have an impact on their prices, so there was some margin compression. They did have to pass on some price increases in the meats and the cereals to consumers. Some of that was received better than others. But yeah, I mean, I think what Tiger Brands does well is they acquire and cluster businesses in these silos particularly well. And whether it's the meat or the cereals or even some consumer goods there, it's particularly well run in that regard.
Yeah, I think you've put your finger on it. I mean, the drought and those margin issues that flow from it are problematic because they will make more money or less money in their bread division, in the maize division, in the rice division, if you've got all that going on.
Yeah.
The other thing, of course, about Tiger is their Nigerian misadventure needs to be remembered.
Sure.
Peter Mtlare, the CEO, came and went and probably lost his job as a function of what happened up there. They waded in deep, bought into Dangote flour mills, had to write off all the value. That does now seem to be past and in the past. And under the new CEO, Lawrence McDougall, things appear to be now hitting a better trajectory.
I agree with that. I think you're right. And I think the hangover from the drought, although some of it's still reflecting in these latest results, I think they will get through that too.
Yeah.
And I think you're probably looking at a much better and more improved outlook. What I like about what Tiger's done in these tough times, because it has been tough time for them, is they've upped their spend on marketing. So they aggressively, when times are tough, buying market share. And that's fantastic. You can do it when you're their size and you have the cash on the balance sheet to do it, because when things do turn, you're positioned and your brands are even better identified with consumers.
Yeah. Although it is tough out there, it should be noted.
Sure.
I mean, you know, to get sequential year-on-year sales of, you know, Energide and Jungle Bars and Jungle Oats and Albany Bread is tough.
Yeah.
In an environment where no one is really winning and the mood is negative. The buyers from the likes of ShopRite and Spar and so on are not going to be doing them any favors when it comes to negotiating, you know, what the list price is of the bottle of mayonnaise that they produce.
Correct.
So it's perhaps best not to be too bullish. I mean, the slide at the end there probably does just reflect a generalized anxiety about consumer-facing stocks in the country and in the market at the moment.
Absolutely, and rightly so. I think there is a concern, but they've managed to weather it well. And yes, they haven't managed to pass on all the price increases, but they've done well is really establishing these household names in the consumer minds, which my views will take them through this cycle.
Your observation would be, vis-a-vis hot or not, that one should look through the current mood and not try to be too clever about it and say this is the kind of quality holding you want in a portfolio?
Yes. It's a company that's easy to like. The question is, where do you get in? I think it's starting to look attractive. It's not cheap, but I think that this company really trades at a valuation that you'll jump at. I think the short-term weakness is an opportunity.
Good.
Hot for me.
Broadly based, so hot on that one. Good.